Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Wednesday, April 22nd, 2020. For this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. The S&P 500 was up 2.29% today, and we closed at 2799.31. What we're looking at here is a year-to-date chart of the S&P 500, and I've overlaid the Fibonacci retracements on this entire move that we've had from where we peaked back on February 19th to where we have bottomed so far on March 23rd. And what we can see is where we closed today at 2799.31. You can see where my cursor is moving. That is right at that 50% Fibonacci retracement level. So far we've had the correction, we've had the counter trend move, and we've retraced right at 50% of the entire loss that we had from the 19th of February through the 23rd of March. And you can also see this trend line that we've been working with. And now we've had 2 days where we've closed beneath this trend line. And so, a couple of takeaways here from my perspective. It's taken trillions of dollars of stimulus from the U.S. government and other governments around the world to even produce this retracement, this 50% retracement. And again, all we've done is retraced 50% of what we've lost. There's still a massive amount of unknowns. You can see we've been going sideways here for almost 2 weeks now, and we'll take a look at that here on another chart in just a second. And we're underneath this trend line that we had on the daily charts that started back on the 23rd. So it looks to me like this market is running out of gas. And the other notable thing about today's trading is, and please pay attention to this data point, guys, this was the lowest volume day of calendar year 2020. So the question becomes, if this market is such a smoking deal, such a smoking value at this level, why was today up on the lowest volume that we've seen in the entire year so far for 2020, okay? So volume does matter. In up days, right, where you go up on low volume, those days have to be questioned. The other interesting chart that I found that I wanted to share with you is a 10-day, 15-minute chart. And what I found in looking at these shorter-term time frames, and this is what I call putting the market under the microscope, and you can only really see this on shorter-term charts, but look at how this 2727, so this blue line is setting at 2727 on the S&P 500, and look at how that has acted on the 15-minute candles. Look at how this has acted as the support level over the last 9 days. Now, this is a 10-day chart, okay, but you can see we got above the 2727 level back on April 8th, and you can see since then we have not had one 15-minute candle that is closed beneath 2727. So, keep that in mind. If you are a shorter-term trader, if you want to put some really tight stops, you might want to put a stop somewhere below the 2727 level, maybe a 2720 or something like that. That, of course, is going to be up to you. But you can see the algorithms kicking in here and supporting the market at 2727. So the question becomes, at least in my mind, going forward as the market is going up on lighter and lighter volume, and we have seen the volume fall off over the last couple of weeks. Today, again, was the lowest volume day on the S&P 500 of the entire year so far. So for 2020, this was the lowest volume day, and I'm always extremely skeptical on markets going up on very low volume. That does not show conviction on the buy side. So be careful here, guys, and remember, we're still in a downtrend. We've only retraced 50% of what we lost since February 19th, and we're seeing up days on lower volume. So be careful. And for those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here is some additional information. Please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. The Simple Market Signals product is a weekly newsletter that contains our proprietary market signals. The newsletter is emailed to our subscribers each weekend. Our goal is to have the newsletter to our subscribers by no later than 2 p.m. Eastern Standard Time each Saturday. You will also, as a subscriber, receive special midweek updates when warranted. So that is whenever there's a major signal or direction change, and that will make more sense after you go through at least one or two of the videos that we're going to introduce here in just a second. And guys, keep in mind that Simple Market Signals, this is not for day traders. So if somebody has a really short-term time horizon, Simple Market Signals probably is not going to be for you. Simple Market Signals is for investors and traders with at least a 6 to 8 week plus focus. So as long as an investor or trader has a time horizon of at least 6 to 8 plus weeks that they're focusing on, then Simple Market Signals is going to work extremely well for them. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. So we give you the first 2 weeks so you can take a look at the newsletter, see what we do. If you don't like it, you have plenty of time to cancel without being assessed any fees at all. So we have made this as risk-free for you as possible. If you would like to learn more about Simple Market Signals, I have the following videos on my YouTube channel. I will also leave a link to these videos in the description box below this video. First off is the longest video. It's about an hour long, and it's the Successful Investor webinar. It's the entire story of Simple Market Signals, including my background and why I feel that most people are going to need Simple Market Signals going forward. There's a tremendous amount of market education in this webinar. So I would encourage all of you to go out and watch this because it is extremely educational, and if nothing else, it'll be very thought-provoking when you watch this webinar. So I would encourage you to do that. Again, that video is out on my YouTube channel. I will also leave a link to this video and all of the videos I'm going to introduce here over the next couple of minutes in the description box below this video. Now, if you want something a little shorter, about half an hour long, introducing Simple Market Signals, it has a lot of the same information as the webinar, if you will, but I cut it down to make it fit into a smaller time frame. So it still gives you a ton of information. It's just not as inclusive. So if you're not interested in investing the whole hour, which I would encourage you to do so, but if you want something a little shorter but still very informative, introducing Simple Market Signals would be the video you would want to watch there. And if you want the cliff notes, right, you want something that's less than 10 minutes long and gives you more information about the signals and the newsletter, which of course is how I deliver the signals. My proprietary signals within the Simple Market Signals model are delivered in the weekly newsletter. The newsletter has a ton of really valuable information in it every weekend over and above the proprietary market signals. But if you just want to kind of focus on the signals and the newsletter and what's in the newsletter, you'll want to watch the Signals and Newsletter Quick View, as I call it. And then if you want more information about the process, about what it looks like, you know, when you subscribe, when you go out to the Simple Market Signals website, what does that look like? And it walks you through the subscription process and then what you can expect from there. This video will help you with that. And if you want some testing and you want to see some charts, right, in a video format of how Simple Market Signals would have worked in the 2000 through 03 bear market, keep in mind I worked on the model for over 20 years and it finally came together for me in 2017. So this is back testing, but it's very accurate because I was able to just go back, look at the charts, and figure out with the model where the signals would have kicked in and where the signals would have changed. So if you want to see the back testing I did on the bear market from 2000 through 03 and how Simple Market Signals would have helped you, the video here, S&P 500 2000 through 03 using Simple Market Signals, is the video you will want to watch. And then I did the same thing for the 2007 through 09 bear market. So again, there's a video on that. I started using the model in 2017, and of course 2018 was a pretty tough year in the markets. The markets were negative that year, and if you'd like to see how simple market signals could have helped you in 2018, I've made a video on that as well. Again, all of these videos are out on my YouTube channel as well as linked in the description box below this video. And if you'd like to know more about my background, I have a video titled My Financial Services Background. It's about 3 minutes long, so pretty quick video, but it will give you my backstory. And I would encourage all of you to watch that video as well. And of course, if you'd like to go out to the website can be found at https://simplemarketsignals.com. And that is the website you will need to go out and subscribe to Simple Market Signals and receive our weekly newsletter, which will include, of course, our proprietary market signals.